Welcome to the League. Hello, and welcome to another episode of The League, where bold ideas meet bottom lines and doing business in Nigeria moves from potential to playbook. I am Coach Linda Uneze, your host. On today's episode, we're discussing how businesses can become ready for local and international investors. And to discuss this topic, we have a very special guest, an executive director with RMB Merchant Bank Nigeria. He's also a non-executive director at RMB Merchant Bank Mauritius. Please make welcome Chidi Iwuchukwu.
Thank you very much.
Hi, Chidi.
Hi. Thanks for having me on your show.
Absolutely.
It's always my pleasure.
Our pleasure to have you as well. I remember the last time we met officially, it was at Doing Business in Nigeria Conference 2024, where you were a speaker. So it's a pleasure to have you back again.
Thanks. It's always my pleasure.
Awesome. So Chidi, you've been involved in various acquisitions and financial deals across vastly different markets, Germany, Ghana, and the UAE. So tell us about one deal that surprised you, and what did it teach you about how African businesses should prepare when stepping into conversations with global investors?
Well, I think the good thing is that the transaction that actually surprised me the most sits in Nigeria. So it's special. It's very, very special. And that's the Dangote refinery. So it's a transaction that I was there from conception till now. As a transaction that has actually spanned 13 years now. So what people can see now is the end product. Everybody's happy that Nigeria is producing its own petroleum products, but that transaction was very complex. And I think one of the good things about that transaction is that it shows that nothing is consistent. It also tells a lot about the founder who is able to navigate complex challenges. Many people wouldn't know how that transaction has panned out in terms of the funding. And this is where you see founders meet global investors halfway. Even through a lot of the complexities and challenges the deal faced, the founder was always able to reinvent himself and also contribute more to the transaction rather than just looking to global investors to continue to fund mistakes. I wouldn't call them mistakes, I'll call them challenges, because especially on the continent, things change, regulations change, governments change, and these complexities usually challenge the vision of founders. And this is one example I always say in most of my chatting topics, to say people should just emulate that transaction because it finally completed and missed so many different structural changes with the transaction. And it has, what people don't know, it's that transaction had almost close to 34 international financiers in that transaction, which it makes it even way more complex.
I mean, Dangote is somebody that inspires us, inspires a lot of business leaders and founders. So, well done. Well done on that transaction. Okay, so in your current role, you interact with companies across various growth stages. You just mentioned Dangote, right? What are some of the signs that you have seen that would make you say this business is not truly investment ready, even if the pitch looks polished?
So I think one of the things I always tell founders is, and these are the cracks that you see early, structure. So I will just start with, there are a couple of signs, but structure. When you see a business that, the founder or the entrepreneur or the entity behind that, just everything centers on them, shows that it lacks structure. So when I see a business that, the CFO, the CEO, everything is the same person, right?
Yeah.
So these are things that I tell people that structure is very important. Governance is also very important. I think it's one of the things that most businesses lack, and it shows the crack. Governance is important, and when I say governance, it means every single piece of the puzzle must be apt, right? In your numbers, the who handles what, the transparency and everything. And once you don't see this, the cracks will be there. These are the early signs and the early warnings that, this is a business that most likely is going to be challenged. Now, it's usually not a problem because sometimes we see that founders usually don't understand these things, and getting the right partners at the early stages could actually help fix these cracks, because these are the things that financiers and investors look to.
Well, don't you think that's quite common with small businesses? Are you saying investors should just avoid the micro and the small businesses?
Well, in my experience, I have seen a lot of small businesses that actually understand what structure is. I don't think it's an excuse. You can create structure within your means. I'm not saying you have to be like a very structured corporate, but just the little things, how you tidy your financing and your financing accounts is important, right? Sometimes people would make excuse that I'm an entrepreneur, I'm looking to this thing, but it's business, right? People just want to make sure that they understand what they're going into, and they understand that the business is going to outlive you or last longer. And as an entrepreneur, that's what should be your end goal.
Absolutely.
If you're building a business that you just want to run through and then it dies after you exit, then it's not a business that anyone will want to invest in.
I like that. So create a structure within your means, correct?
That's correct.
Okay, I like that. So from your experience, what does real readiness look like? You've just talked about structure, right? So what else do you look out for beyond structure?
So I always tell, founders, and entrepreneurs that always put yourself on the other side of the coin, right? Remember that every single business comes with an ambition and a vision from the founder. Now, I always give this crack. Nobody wants to fund ambition. Nobody. People want to fund sustained businesses that provides a return. So readiness is trying to connect, ambition with sustainability. It is one big mistake a lot of not only founders. I don't look at early stages. Every single business. Once you can marry your ambition, with the fact that there's risk return, it works. Because as much as I've been doing this for a very long time. As much as I like your business, I just need to make sure that the right return is there. Because you would actually benefit a lot more if the business is successful. Any financier just wants to make sure that it's an in and the right out. So that readiness to, once you connect the dots, and these things go with how you prep for investors, what are the things that you need to put in place, connecting reality, with ambition as well. So you say you want to grow, but you're growing in a challenged environment, or is it in a growing environment? How do you put the pieces of the puzzle? And once you get the pieces of the puzzle right, and again, I said that takes looking on the other side of the coin and removing yourselves from the emotions, from the script, right? Because I always tell people, look, once you take away, those little things, right? And these are the emotional connection to your transaction. You start to see very clearly, right? To say it's all about risk return. I always tell people, if you are going to invest in something, you always expect your money back, and once you're able to appreciate that, then you connect the realities, and you're pitching a deal in a challenged environment. You have to show the reasons why your deal would actually navigate those challenges.
Okay, so for the listeners out there, just remember that it's important to connect ambition with sustainability to attract either local or foreign investment or investors. Thank you for sharing that, Chidi.
Yeah, thanks.
Brings me to the next question, right? I was recently speaking to a couple of founders, and there was a statement that was made by someone about capital becoming cautious globally. Investors are now being more careful with where they put their money. So for the founders who are listening in today, where do you think, or what do you think being investor ready would mean beyond 2025? What are the trends? What should they be looking out for as founders just to properly position themselves? Not artificially, not to beautify the business, basically for them to position themselves for investment.
Okay, I think you're very right. Capital is scarce, Capital is scarce everywhere, right? And the world is changing, and I think that the days of easy capital is gone.
It's gone.
It's we all experienced it. We all saw, people chasing growth, people chasing some form of high multiples and co in terms of how they invest. So I think people are connecting to the reality that these things are going to get difficult. Now they're being more and more careful with the businesses they invest in. And I think it goes back to what I was talking about is people have seen people sell growth stories. And this is why I say once you connect ambition with sustainability, it works, right? And nobody is buying the growth without, some form of validity. So I think what founders should start to look towards is actually proving concept. It's one of the things I look for. If you've proven concept that it works, then it's easy for people to see how it grows. But if it's something that spans into the future and people cannot connect to, then it's very unlikely that the capital is going to rest there. So people want to see people that have proved concept, people that have actually put in the real sweat equity. I know people always say sweat equity, but I always say, is there enough sweat? So once you've put it in and it's tested, it's working, then people can actually see, okay, if I put in this amount of capital, then I can actually see the growth. Nobody is the reality challenges are there, right? And investors understand these things. But at least what are the chances that, the investment they're going to make is going to be successful? And I think the ability for investors to measure that is going to be very, very important for founders. So if they pay attention to those cues and test it themselves, then it makes it easy for an investor to make a decision.
So what's your thought around the trust issues we have?
Well, I think trust is overrated. I've always said, yes, people want to connect with some form of validity of, trust. Look, now people have gone through very bad situations where, the founder says X, it does Y. And that's why I just mentioned that, those days are gone. And that's why I called it overrated, because I don't think that's what people are focused on now. You got to prove it. If you prove it, it works, money comes to you. People don't want to, we don't want to be best friends. We don't want to believe in your vision. We don't want to start to measure this element of trust that you've just brought up. That becomes secondary. So get your acts right, and then the money comes to you. If not, take your trust somewhere else.
If it's proven, it works, the money comes in.
Yes.
I like that. Straight to the point. So, and there's also another idea in the entrepreneurship circle that good businesses always find money. I think this contradicts it contradicts what you just said now, right? But do you agree with this in the Nigerian context? And what do you think founders need to unlearn to attract the right kind of capital today?
It's good you said good business finds money, and I always tell people that, it's if they get found. So the reality is that sometimes some good businesses don't get capital, right? And just because of the founders have just not done the right thing. And preparedness is actually important. The most prepared businesses find capital. That's the way to put it.
That's a better way to phrase.
Because once you're prepared, you definitely understand exactly how capital is going to come in and how capital is going to be utilized, what that capital is going to be used for, and how that capital is going to translate into some successes or growth. So I always tell the good businesses is go and get prepared, because you will never get found, right? And preparedness goes into things we've mentioned in the earlier stages of our conversation is your structure, your governance, your accounting. Don't wait for the investor to tell you this, and how you even present, right? Sometimes I've been with founders who, they jot all their thoughts on a piece of paper, and that is a way for them to present, because they say this is how they've envisioned the businesses, this is what they want the business to look like, this is how the business will grow. But I said, well, that's good. But you see, it's good you mentioned things like trust. I would feel you're more prepared if I realize that there's a consultant on the back of that, your thoughts. It just allows the person to frame their mind that you're willing to actually bring in a third party to measure your vision, to look at your structure, to validate it. Just that it's enough to convince some investors that, somebody else has looked at it, and then the person believes that, A plus B is C, right? And then financials, I've always looked at some of the accounts and financials that investors present. And some of them really, I ask them that does this connect to accounting reality? I'll give you just one example. That's the way I pick holes in any, in any investment presentation or memorandum. Cash, you start with zero cash, and next thing you have a lot of cash in the bank. And I'm asking, if that was the case, why do you need money? Is the big mistake people make in actually connecting their pitch with reality. If you're coming to an investor and then your models and then your accounts, that's your future, shows that there's a lot of cash, why then do you need my money?
Why do you need the money?
So you see small signs like this, and it is preparedness to understand that cash is fungible, and that cash is supposed to be doing something, and the person has just put a vision on a script, but not actually taking and connecting. And that's why consultants are important, and that's why third party is important, because they can say, okay, if you have this cash should be doing this cash should be doing that, and then the presentation looks more like reality. And I always challenge any business. I said, if you're a business that spits cash, the whole world will go after you, because any investor put in there buying cash. So you wouldn't even need anyone, because, and if you've been in businesses before that turns around cash, you realize that you don't need people, because you can take $1 and multiply.
That's interesting. So
I'm giving away my tricks. But I hope people don't start manipulating their presentations.
I hope not as well, because we believe that there are people out there genuinely who want to grow their businesses. So we're hoping they're really getting the insights, not for them to manipulate, but just to take the feedback and improve on how they operate their structures. And, just to bear all of this in mind when you're looking for investors and investment. So don't worry. Don't worry about that. So just looking at the broader ecosystem, the banks, the private equity, VCs, right? Where do you see the biggest disconnect between capital providers and Nigerian businesses? And also, what will it take to close that gap?
It's always the big question, and that's why I'll take RMB for example. We find it very, very difficult to fund businesses. I think it's the communication that I feel like, and what each party wants, which creates the disconnect, right? The business or the founder, the entrepreneur, wants to grow. And they want to grow rapidly. They're chasing success. They're chasing ambition. The banks, the financiers are looking, I just want to get my money in and out. So we at RMB, we're kind of very different, right? And even me because of my background is leverage finance, which has dealt with acquisitions. I realized that in and out for a financier is sometimes difficult because it doesn't factor in challenges. I keep saying, doing business in Nigeria and challenges are 5 and 6.
I was hoping you wouldn't say that.
So,
and
factoring
reality.
Unforeseen challenges is where this divide is, because once the challenges creep up, the financiers lose patience, and I always say the best businesses always try to factor this ahead of time to understand exactly where are the buffers, what would you do when challenges happen, right? And trying to let the financials know what the situation will be when challenges happen sometimes bridges this gap. I've had businesses who show models and say, should there be challenges, this is exactly how it will play out. You might not get your money back as fast as it is, but your money is kind of secured because the business is foolproof for challenges, but might take it slower for you to see your return. Just that communication is important. I always say, sometimes people feel saying it, puts them at the back foot, but I say no. It's good for people to understand exactly what they're going through and exactly how challenges will be handled. One of my smell tests is when we even deal with investors and deal with finance, is we always try to understand exactly if things go wrong, what are you going to do? And they always get taken aback by the question. So we spend a lot of time on that to say, just tell us, let's assume everything does not play out. What's plan B? And being able to think through and understand that and connect that is important. It bridges that gap. It just helps everybody. Because, so we all sell a good story, but good stories don't always play out as it is.
It's interesting. So communication and also having, would we say having a plan B as to if the business is challenged?
Yeah, I think saying having a plan B is taking it way too far because obviously nobody wants the plan B to play out. But just explaining exactly what a plan B might look like. I think that's the way to put out there. Nobody wants you to say you already have a plan B, then it means you're telling the financier that,
there's no point to investing.
That's
the
correct.
business might fail.
Okay. So it's just, saying what it might look like, which means you're considering the challenges and then just, trying to show how you can morph the business to meet challenges.
Awesome. So I have one last question for you before we wrap up. You're someone who I know that you mentor a lot of young professionals and founders as well. What's one piece of advice you find yourself repeating over and over again that gets overlooked in the rush to raise money?
Okay. So this is the part where I scripted it down so that I said I don't miss it, right?
Great.
So I have like 3 big things. I said you have to think big, act boldly, and stay adaptable.
Amazing.
And I'm just going to read from what I wrote, right? I said Africa and Nigeria is an ever-changing environment. So knowing your craft is critical. Build strong networks. I always tell people. And then most importantly, that people should approach everything they do with integrity. If they just follow this discipline, I have this in written that is something I always use, and say, if you follow this script, right, success is just inevitable.
Success will be around the corner, as some people say.
Exactly.
Awesome. Thank you for sharing that with us, Chidi. It's been a pleasure talking to you. But before I let you go, if you have 120 seconds in a room filled with overwhelmed entrepreneurs, what would be your words to them? 120 seconds.
Believe. And then just stay on course. And always rise above, you know the room.
I like that.
I always tell people, you know,
I like that.
Disappointments would always come, but ability to deal with that is actually very important.
Very key. I love that. Thank you so much, Chidi. It's been a pleasure talking to you. I've enjoyed myself and I've learned a lot. And I'm sure the viewers have also learned a lot from you today. We're hoping that we can invite you again and you would say yes when we invite you again.
I hope so, provided I don't give too many secrets, right?
No, right? No, it's okay.
You know, and I will always love to share the insight because I always say that the more prepared businesses are, the easier it is for financing to follow. You know, I like my job to be easy. So the more insights you give, the better, you know, for this. And I've enjoyed myself as well. It's always a pleasure, Linda.
Awesome. Thank you so much. And thank you to our viewers for joining us today. We look forward to having you soon. My name is Lindauneze, your host. Thank you.